Hey guys, Ben Graham here with Remax, bringing a topic that should be near and dear to everyone's heart, especially that owns or will own a house and have a mortgage. Now, there's a lot of philosophies and thought processes on the good and the bad of having a mortgage. I personally believe in getting that mortgage monkey off of your back to give you that financial flexibility, that financial freedom. So that's what I'm going to focus on. If you want to use your money to be leveraged because your interest rate's way down here, you can make this much money in the market. That's your prerogative. I get that, so I'm not knocking that. So if this is of interest to you, pay attention. There's really 7 ways to get that mortgage monkey away. The first is the bi-weekly plan. Now, a lot of banks offer this as ways to set it up. Instead of doing monthly, just simply do it on a bi-weekly basis. So most people are paid on a bi-weekly basis, so it might make sense anyway. And as you know, you will get 26 payments in that way, or 26 paychecks. So that is more than just the 24. So that's good because not all months have 4 weeks. The next one is what's called a matching principal technique, and that's basically whatever your principal is out of your monthly mortgage, match that. So say your mortgage is $1,500 all in, $1,000 in interest, especially in the beginning, and then $500 in principal. So take another $500 and have the bank to make sure that they set it up this way, that they apply that additional $500 to the principal balance. So I'm not going to go into the whole compound interest thing and all that conversation, but we can if you have questions. So that would be another way, is the matching principal. Then there's the extra payment per quarter, is very similar to the bi-weekly plan. Instead of doing it on a weekly basis, simply do it on a quarterly basis. So that's number 3. The number 4 is cash influx. Wouldn't that be great? That got an inheritance, you got a big raise, you got a bonus, you closed a deal, whatever line of work you're in, or however it happens, win the lottery. Yeah, that's a whole other conversation. Is just cash influx. So Aunt Sally from Timbuktu leaves you 10 grand. Boom, apply it towards your principal. Make sure it's to your principal. And then number 5 is refi to a 15-year loan. Now, interest rates, as of the timing of this video, interest rates are going up. They're still at historic lows. So if you didn't buy or refi in the last roughly 3 to 5 years, then definitely look into this and see. But if you're getting closer to the end of your loan, this might not be good to reset it to a 15-year loan, because the whole purpose is to get rid of it completely. But that's definitely something to consider. And then option 6 is to simply divide by 12. So take your total amount and divide that by 12, and then add that on to each of your monthly payments. So it's, again, similar to the bi-weekly and the quarterly, but this is, I should have wrote in here, monthly, if you can read that. So that's bi-weekly, quarterly, monthly. Those are your plans. And then option number 7 is the one that I love the best, is just called do what you can. So, hey, if you just got rid of cable and went down to YouTube TV, saved $100 a month there, put that $100 towards principal on your mortgage. This is assuming that you guys are debt-free, got your college savings fund set up for the kids if you have them, you got your retirement set up. So then this is where you would focus on this stuff. But the biggest key out of all of this is having it go to your principal. Whenever you're talking to the bank and setting this up, have that extra payment go towards the principal. And again, there's a lot of math involved in why, but and we can get into that on another video, but bottom line is make sure that it goes there. So hopefully this was informative, helpful. If you have any questions on this material, talk to me, talk to a lender, and I would love to chat further about your real estate. Take care.